Karnataka has established itself as a leading hub for electronic system design and manufacturing in India, contributing 10% to the nation's electronics output. We are also home to 400 plus MNCs with global R&D centers. With over 100 fabulous chip design houses and 40% national share in electronic design, Karnataka stands as a prominent hub for chip innovation in India. Invest Karnataka 2025 will bring more global players to benefit from the state's strong and tech-enabled ecosystem.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, we have been seeing a volatile trade all through the course of the day, and 23,000 is back with us, 58 points lower in trade as far as the Nifty is concerned. Right now, if we look, there is the metal story that's doing well. There's PSU banks that are doing well. You have financial services and private banks also ticking a little higher, but rest of the pockets are still trading weak, especially the real estate stocks that are now down 2.8%. Remember, last 2 days have also dealt heavy blows to real estate space, and this index has slipped below in the bear territory. Oil and gas space also 1% lower. Autos, IT, pharma, they've also all lost a lot of ground. There has been some recovery from the lows as well as far as the entire market is concerned, but we are still lower in trade and a lot of volatility that can be seen. Within the top names, when we look at the NSE at this point in time, well, if you will see a lot of these heavyweight banks that have been supporting IT names that were supporting in the markets, those have again taken backseat. On the Nifty, you have Bajaj Finserv that's up. There is the insurance names SBI Life, HDFC Life that have pulled up in trade. Then there is also Tata Consumer Products, some Tata Group stocks like Tata Steel, Tata Consumer Products, they are doing better in trade right now. You also have Ultratech Cement, L&T, so some infra-related basket stocks are actually up and about. But things have rather improved from the morning, where a lot of stocks were actually reeling under pressure, and now the street seems to be divided on the Nifty stocks as well. What still is cracking a lot is the auto names, M&M, Eicher Motors. These are the top losers on the Nifty. You also have Reliance Industries that continues to reel under pressure, 1.6% lower. You also have BEL and Power Grid as some of the other counters that are still on the back seat. When we look at the gainers and the losers in the broader market, still there are some names that are actually pulling up. Indocount Industries is 20% circuit. It was up and about, but now you look at it, it's at a circuit now. You also have stocks like Bajaj Healthcare that's up, Godfrey Phillips that's again moving 8.5% higher, Just Engineering, that's another one. Force Motors is in fact defying the trend in the overall auto space, that's doing well. Campus Activewear is another one that's also moving up in trade. Vimta Labs is up and about. So some of the more popular names are actually coming in and seeing some traction, whereas on the downside you again have stocks like Gensol Engineering that continue to reel under pressure, Alfagio, Tilak Nagar Industries, Huhtamaki India, that's down in trade. Ircon International post earnings continues to reel under pressure. Bayer Crop Sciences, several of these stocks that are actually down in high single or double digits as well in trade. But let's get discussing with our guest who is now joining us. Mr. Sharad Awasthi, Head of Research at Smiths, is now with us. Mr. Awasthi, warm welcome. Good to have you with us. Well, tell us, how are you reading into the sentiments amidst all this volatility, global uncertainty, news that's panning out? This is despite two of the major news events are actually behind us when we talk about the domestic markets budget and the RBI policy. Both were largely as per the expectations and slightly better off, but the markets are still not getting the confidence to be on track. What is it that is worrying the markets the most at this point, sir?
I think the information coming out of the US and the uncertainty that is coming out of US is one major reason that is bothering the markets. Though if you look at the international markets, you would conclude that maybe it's bothering us more, that is the Indian markets, more than the rest of the world. But I think the uncertainties are huge, and maybe it is also culminating from the fact that, post-COVID, this is the first time we have seen such an extrapolated correction over a longer period of time, and in terms of value also it's pretty deep. Where just narratives are not helping you get prices up. Means you can't talk prices up for shares, you have to put numbers out there. Some reality is sinking in, good for the markets. But I think these two things are culminating into this kind of crack. There's been too much, focus on just prices and the trading aspect of it. So I think gradually some bit of sanity is coming into it. Uh, some bit of the SEBI involvement or the way the regulatory changes have been put into to curb excess volatility and excess trading. I think that might also be playing a bit of it. But I think most of the things that could be addressed at the macro level, whether through the budget or through the RBI liquidity infusion, has been done. International flows would still be dependent on the lower interest trajectory starting to happen in the US. Because of tariff, there is a lot of uncertainty, because of these tariffs, maybe US inflation would remain elevated for a longer period of time. And hence, you have not seen any kind of cracks in the, 10-year G6 globally, in spite of rate cuts happening everywhere. So I think gradually over the next, 2 to 3 months, we would settle into a tone that maybe the tariffs are not going to be that aggressive as we perceived it earlier. And once that tone comes down, I think there is a high probability that inflation trajectory would be much more clearer. And then probably the flows into markets like India would come back into the normal zone and we would see good inflows. The currency weakness is also extrapolated to a point, I think, from where to weaken further would be difficult. The first level of, movement by RBI has already happened. So I think gradually even the currency part of it should reverse favorably for India. A lower interest rate trajectory should result in better FII inflows. And the quarterly numbers should also be better for, the next 2, 3 quarters as the tax benefit driven consumption kicks in.
Fair point. Sharaji, I also wanted to get a sense of the big debate that's underway in the domestic markets, and that's whether to stop your SIPs or not at this point in time in the markets, especially when it comes to the mid and small caps. Now, we do know that small cap index is down 20% from its peak already. It's entering a bear market scenario, 17% down for the mid caps as well. We do know retail investors' portfolios, which are more skewed towards mid and small caps, are actually seeing deeper red and deeper cuts than the others. So at this point in time, how are you advising the retail investors who are looking at their portfolios and now probably at a risk of, probably stopping their SIPs or closing their demat accounts? That could be worse.
See, if you have been trading rampantly, the demat account is a different ballgame totally. If you have been trading rampantly on just hearsay basis, I think then it does make sense that, sooner than later, once in a while, you will get this kind of one-way run up in small cap, mid caps, where no sense prevails and it's just one way upward. But most of the times you would end up burning your fingers only. You would just see paper profits and then you would see lower prices. You'd not be able to exit. You would end up averaging beyond your limits. And in case you are leveraged, that's another bigger problem. So I think for the demat account, it's if you're just trading and you don't have a long-term horizon, you're not properly analyzing the stocks and just doing it on a hearsay basis. Uh, I think it's better you close it down. But in case you are trading in a disciplined manner, you understand what you are doing, then you can continue to do. If you are an investor, you can continue to do it. I don't think that's a problem. The basic thing is that you need to define an approach and a way in which you are wanting to trade, invest, or do whatever. But there has to be a defined approach, and not just based on hearsay. And the second thing you spoke about is SIPs. I think certainly you're
Yeah.
not stopping your SIPs, you're not closing down your SIPs. The whole objective of SIPs is not to buy in a rising market, but to buy in a falling market. That is where cost averaging works. And I think for generating alpha out of the markets, you have to be in small cap, mid caps. Occasionally, 30-40% kind of corrections will happen in the small cap, mid cap space. But if you ride it through by not discontinuing your SIPs, for most SIPs, your strategy should be that you would have a 5-year period where you do not bother about markets going up or down, but you accumulate the corpus during that 5-7 year time. And then maybe if your advisor tells you, that asset allocation wise, you need to get out of this for the corpus that you have accumulated, you don't need to time your SIPs in terms of troughs and highs in the market. So there's no point of closing down or stopping your SIPs. You should continue with that. Maybe the accumulated corpus, if your advisor tells you so, if you consider my advice at these valuations, you should certainly not be exiting any equity investments. I think rather we are advising people to enter. These are
Okay.
bills. Maybe uncertainty takes you down by another 500, 700 points. But every 500, 600 points, you should have a target of adding your allocation by 10, 15% additional.
Got it.
That's how you make money in equity markets, not by buying in a rising or a euphoric market. So SIP is no point in closing down. You should continue, and largely you should focus on the asset allocation part of it, where you have accumulated a corpus over a 5, 7 year period.
Right. So when we talk about asset allocation also, sir, I wanted to understand what is your view on gold that's been currently surging to record highs again. Why I'm asking this is just now, about a few hours ago, we've got the Amphi data for Jan. This is for the first time gold ETFs have actually seen the highest ever inflow, and your AUM crossing 50,000 odd crores as well. So it's not just a physical demand, not just the jewelry demand where India is on top, but even in gold ETF. So it's all across various forms of gold that are attracting investors' attention at this point. But again, gold is also at a record high level. At this point in time, what is your own expectation that investors should look at while looking at those two options, equity versus gold? Where should the fresh investments go?
See, I'm an equity guy, so anytime you ask me, I would be in favor of equities only. And I'm very clear about the view that gold is an asset class where you only park when you don't have an option where you can grow better. I think equities can obviously grow better. At times, the valuations are very frothy. Maybe then you can decide that, just to park your money into a safer haven, you shift your money into gold out of equities when valuations are out of reach. But right now, I don't think that is the scenario. And the other thing that plays out in your gold investments is also something which is the USD INR relationship. So part of the depreciating rupee has also helped you a lot. So once if that is what I'm expecting, I hope this time I'm right. If the currency does start appreciating vis-a-vis the USD, so your INR gold investment will also not fetch you the same returns as a gold dollar-based gold investment would. So I think that is something that would also play out in gold now. And regarding the flows that you spoke about, I think this is a dilemma that is there, that has been there since ages. The
Yeah.
maximum flows happen at the top of it. So I think to read too much out of that would be very difficult. Most asset classes, if you see, the maximum flows start happening when more or less the asset class is creating a top. So unless and until you have very uncertain geopolitical scenario or a war-like scenario or a severe depression, which I don't foresee in the near future, the
Okay.
Trump wild card, you can't really talk much. But I think considering whatever I'm seeing right now, I don't think there is a possibility of something like that happening. So maybe gold is more or less at a fairly high value from here. To expect it to appreciate further would be difficult. And vis-a-vis, I think equity does offer a very good place to be in.
Okay, fair point. Also, let's discuss the earnings aspect, Mr. Vasti, like we always do now. Almost what, two-thirds of the company, or it's already out in terms of the earnings. What have you assessed thus far? Where have you found good results, and where are you disappointed the most in terms of Q3?
Uh, yeah, I think in terms of Q3, if you look at the broader numbers, what we are talking about year-on-year sales growth of around 4.5%, profit growth of 14-15%. Even on a QOQ basis, while sales are flat, your profit growth is around 11-12%. So I don't think there's a lot of problem. I think as a plain, you can say, some of the smaller industries did not do very well. Paper did not do very well, but paper was already priced in factors were priced in. So I don't think any sector has done very badly. If you look at most of the sector specific, I think most of the companies that have come out with results, a larger portion, 3:1 or 3:2 kind of ratio would be there, where the positive numbers have been better. So I think on balance, we have been good. Around what 1,000, 1,100 companies are still to report. So I think that will finally set the balance sheet right. But till now, whatever has come in, I think there is a 1:2 kind of ratio where the better performing companies have given good results. BFSI is one space which I think has positively surprised because the undertone was very bearish prior to that. So I think banking is something that I'm looking at with a positive attitude, and with some improvement probably in the MSME microfinance space, there could be a lot of beneficiaries from the small finance bank space.
Okay, got that. Like how we are looking at this meltdown, but I'm circling back to the mid and the small cap space. Are you still finding any pockets of value here, sir, or do you think some more froth needs to be taken out? How would you approach the mid and small caps currently?
Not across the board. I think again it's a very big universe. You have to be very stock specific. So I think generally the places where most people would be trapped would be the railway and defense counters,
Yeah,
maybe some bit into the PFC RECs of the world.
correct.
But at these valuations, if you specifically talk about PFC REC, I think both of them are trading at what 1.2, 1.5 times. We are not expecting to see any kind of slowdown, in terms of the growth rates, etc. No piling up of NPAs. Maybe an IREDA might look a bit very expensive. That's a different ball game. But generally, I think the railway stocks now with this correction, most of them are available at decent valuations. So I don't
Okay.
think there is much froth left there. And I think the export side could give you some trigger in companies like RVNL, etc. Uh, Capex in terms of railways would continue, so the IRFCs of the world would continue to benefit. There is no NPA risk, so I think the valuation terminologies might see a shift there. For the defense companies, I think, yeah, don't expect linear relationships. There will be hiccups from time to time. These are long gestation projects, and problems happen in these engineering orders. But I think at these valuations, it does make sense to start budging in BEML. We have been bullish for some time and went up
Okay.
pretty high.
Okay.
But I still think a 4,000 kind of target is fair value for BEML. And for the rest of the pack, even a Kochi and a Mazda, I think now at these valuations, they don't really appear expensive. Most of them were trading at about 25, 30 times forward. But right now, on an average, they would be trading at 18, 20 times forward. And I think that's decent valuation. And once the numbers start coming in, maybe with a bit of a lag, 1 year kind of hiatus, I think after that, these companies can start performing very well. So I think you should start accumulating these stories. And if you have them, you have been stuck in them, I don't think there is any point in getting out here. At least 50 to 60% appreciation you should get at some point in time over the next 12 to 18 months. And I think maybe that is a time where you could relook at that. But there should not be any hurry in terms of selling them out at these valuations.
Fair point. Well, the Nifty Bank at least has pulled up into the green. The Nifty is still lower in trade. Viewers, we'll take a very quick break here. Mr. Avasti, you stay with us. We'll be back and we'll discuss the last 10 minutes of trade on the markets and the opportunities that lie ahead for the investors. Stay tuned.
Invest Karnataka 2025 is our chance to showcase Karnataka's best to the world. The business community, startups, academia, and even youngsters, I invite everyone to be part of this mega platform. From February 11th to 14th, let the world witness why Karnataka is the best destination to invest.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra and we are in conversation with Mr. Sharad Avasti of Smiths, who's helping us out understand the current setup in the markets and how to spot opportunities and where to stay cautious. Mr. Avasti, when we had begun conversations about this new year, the themes that could be important to track, financials was one of the consensus themes. How are you really looking at this space currently, and where do you think that risk reward ratio is perfect at this point in time to continue to accumulate? If that is one space, because we still don't have FIIs buying into the Indian markets, but there is this expectation that once they return, this is the pocket that probably will see higher action.
Yeah, certainly. I think that's this pocket will see higher action. For the long-term pension funds, you can expect the insurance companies to be beneficiaries. I think LIC would certainly make the cut at these valuations, even HDFC Life for targets of around, 750, 775. LIC, we have very aggressive targets, to start with maybe somewhere around 1500, 1600. Similarly, I think IndusInd Bank could be a very big beneficiary of this turnaround. as the microfinance and MSME space, rebounds, I think IndusInd Bank would be a very good bet. Even if it trades at, traditional price to book, I think the fair value could be somewhere around 1500. Kotak, with the type of changes that has happened in the management, that could be a good story to bet on with this change. The Gen Z focus, etc. I think coming back to around 3.5 times price to book, you could expect Kotak to trade at somewhere around 2300. So I think these are 3 4 names that I'm looking at, and I think there could be very good opportunities within the BFSI space.
Okay, fair point. We're seeing some more pull-ups in the market. You have the PSU banks that are definitely pulling up the market. Private banks are into the green as well. Financial services. So it's the banks and the financials that are actually ticking higher now and helping the markets come out of the weakness. Then along with it, metals have improved a bit. 0.7% higher. You also have the media stocks and the Nifty Next 50 that's also pulled up into the green at this point in time, and you are seeing some action there. Let's pull up the stocks which are actually up and about. Well, you have again those banking names: Union Bank, you have Bajaj Holdings, you have Adani Energy, Chola Mandalam, Varun Beverages, Dabur, IRCTC, Interglobe Aviation, Info Edge, interesting names which are actually pulling up into the green at this point in time. Let's discuss this pocket also, sir, with you. Consumption basket, particularly. Consumption was being hailed as the next big idea, the next big theme since the budget, because the budget clearly focused on putting more money in the hands of people for those earning up to 12 lakh rupees across for those earning up to 12 lakh rupees. I want to understand which sector and which space do you see getting maximum benefit of this, even though the money will start getting put in starting April. That's new fiscal year. We still have to wait for 1.5 months for that to come into effect. But do you think consumption theme is a serious theme that one should be looking at, or is it again going to be something that will whiff past?
Uh, Frankly, I think if you are looking at the 12 lakh bracket, largely these would not be people who would start consuming more on the eatable side. It could be more, more on the borrowing side where they spend more, maybe on travel and tourism, maybe on consumer durables, higher end upgradation of that, upgradation of a car, that kind of expenditure would be higher, I think, in this bracket. I think the basic consumption pickup has to come in from the lower tier being upgraded to a higher level. I think that is the story that will play out in India over the next 4 or 5 years when we are talking about doubling the per capita income, increasing urban populations. I think that is where consumption will pick up. That is the theme that will move at parallel with this. But with this initial budget boost, I think you could be looking more growth in terms of the smaller banks and finance BFCs basically lending to consumers, more spend on consumer durables, better spend on higher valued cars, etc. I think that is where most focus will be, and obviously travel will obviously be there. So I think these are the three themes that would connect better. The direct consumption theme, I think that will play out naturally over the next uh, 3 to 4 years as the per capita income keeps going up and the urban population keeps rising over the next 6 7 years. I think that is a natural theme that will go up, and even the rural side of the population, the per capita incomes will go up. So that's a dual benefit that the whole consumption theme will drive it to. Uh, so I don't think there's a direct benefit out of this, tax benefit that you're trying to play in. In terms of valuation, most of the direct consumer durable consumer FMCG companies, I think I would not be very comfortable at these valuations also. Maybe, a 10 15% crack would make them even more attractive. But I think from here on, you can start nibbling into these counters, have a staggered approach, divide it over three tranches over the next, 10% fall every 2 3%, you add 25 30%. I think that would be a good strategy. Amongst the new D2C players, I think Honasa could be a good name you could bet on. I think I've been very positive on this. There have been some hiccups in the numbers over the last 2 quarters, but I think that is something that could, double as the numbers start to improve. So that's a very smart play.
Okay. So, Mr. Vasi, could you also share with us if any new fresh stock ideas have actually emerged in front of you over this recent downturn in the markets as well? Have you added any new stock to clients' portfolios as well?
Yeah, I think you were talking about real estate. Real estate has seen a bit of correction. I think Signature Global is a good idea to look at.
Yeah.
They have a good portfolio in the NCR region. And I think in terms of growth also over the next 3 years, the growth targets are very aggressive. I think at these valuations, it's an attractive bet to have. Even some of the smaller companies, Suraj Estate might be a good bet. A lot of correction has set into these. And we are talking about, a lower interest regime, a lower interest trajectory, and urbanization, etc., as a theme would continue, per capita growth would continue. So I think all this should, bode very well for most real estate companies. But valuation comfort is high in these two, three names. Suraj Estate, maybe mid to higher end name, I think a Signature Global. And even for that, Keystone Realtors, I think at these valuations, these two, three names do make sense.
Hmm.
Even a Shriram Properties on the contra side. I think these are
Okay.
good ideas you can look at. But if I had to bet on one, I think Signature Global would be my top bet.
Okay. Are you cautious on any space right now, Mr. Vasti? Any key sector or a segment in the market? What about metals? I mean, like, are you comfortable with it? Looking at what's happening on the Trump tariff talks, this space again gets vulnerable because of its global connectivity issue. How are you looking at some of these sectors which have probably high risks?
Uh, yeah, I think metals, but there's not much froth in the valuation. If you look at most of these stocks, they've already corrected what
Hmm.
maybe trading at 10, 11 times. Rather, I think if the US does, as the US has been talking about tariffs aggressively, if those tariffs are implemented, maybe Novelis benefits Hindalco more because the prices go up for the domestic market. And Novelis is a larger pie of the total numbers of Hindalco. So, there could be various pros and cons to what is happening. And even the last time they did tariffs, not much happened to the total trade, logic. So trade finds its own way through other channels and to avoid those tariffs. So I think the direct relationship would be hard to draw. But yeah, I think at these valuations, I would not tell there is too much froth for that matter. But I would be more convenient holding on to the aluminum based stories. I think Hindalco at these valuations would even conservative valuation wise offer you 70 to 100 rupee kind of upside. Nalco is also attractively valued at these prices. I think next year to next year the numbers might look very good over the next 1.5 2 years. So I don't think you need to be too bearish at these prices. I think most of the negatives might be priced in for most metal stocks. Some might not go up much, but Tata Steel, JSW Steel, long term, they're very aggressive capexes. Once they start playing out, I think it would look very normal. Short term, yeah, sentiment wise, maybe steel might have some hiccups to see. So I think it's better, sticking to the aluminum plays. Hindalco would be your best bet based on the benefits that Novelis gets out of these tariffs.
Okay, fair point. Well, thank you so much, sir, for being with us on this edition, helping us out with various strategies on the markets in this very difficult setup. Always a pleasure to host you, and we will have you back very soon again to guide all our viewers of Business Today. Thank you so much for being with us today. 23,054 right now for the Nifty, 18 points lower. We may just end on a sixth consecutive day on a lower note when it comes to the markets, 0.09% lower. Just a tad bit lower. We tried to pull up and we managed to pull up quite a bit and recover most of the day's losses, but still are trading below the flat line. The Nifty banks definitely outperforming, 49,516 now with us, 0.2% higher, pulled up by PSU banks, pulled up by private sector banks, the key index contributors if you see clearly today. You will find a whole host of these leading banks like HDFC is contributing, Kotak is contributing on a higher side, L&T, Bharti Airtel, Bajaj Finserv are some of the other counters that are contributing on the higher side on the Nifty. PSU banks, metals, financial services, private banks and the Nifty bank overall managed to pull up into the green, but the Nifty Realty continued to be weak, almost 2.5% lower. Autos about 0.7% of a decline, oil and gas, pharma, IT, consumer durables, and of course the broader markets, even though they have reduced their losses by a far margin for the intraday levels. They're down by 0.2% odd, recovered most of the losses right there, but definitely we have closed on a better footing. F&O gainers, Angel One, 8.5% higher, very strong move. Ashok Leyland, 7.5% up move coming in on this one. Strong move for this counter as well towards the end of the session. Steel Authority of India, 6% higher. PB Fintech, improvement, 4.5% up. In fact, the entire insurance basket has been showing us some traction. Then you also have CAMS that also pulled up in trade. On the lower end, on the F&O space, you still had names like Prestige Estates, SJVN, Godrej Properties, Jubilant Foodworks post-earnings, DLF, or most of the real estate players that were still declining in trade today. But we'll wrap it up at that, viewers. What we'll do is we'll continue to get you all the fascinating insights from beyond the markets, but an important aspect, taxation. The new tax bill, the income tax bill, is likely to be tabled in the parliament tomorrow. There are already some anticipations and expectations of what this new tax bill could entail. 4 p.m, a special session on that. What could that mean for you? Because this is a change of the direct taxes. Does it make things simpler for you and I? Is something that you can wait to find out. 4 p.m. is when Siddharth Zarabi, Managing Editor and Editor of Business Today Television, will be here to discuss that with experts. Stay tuned.
Karnataka is India's ultimate startup destination with over 14,000 registered startups and 45 unicorns. Bangalore, proudly known as the nation's startup capital, ranks third globally in the number of startups, cementing its place as a powerhouse of innovation. The city also has 144 incubators and accelerators and 1,500 plus VC funds. Karnataka's success is further driven by strong industry-government collaboration, a bold entrepreneurial spirit, and cutting-edge R&D hubs of global giants. As we approach our global investors meet, I eagerly look forward to recognizing and rewarding the startups shortlisted through Venturize, our international startup challenge. Venturize is set to boost startup ecosystem and drive innovation and entrepreneurship across the country. Join us as we accelerate growth and shape the future through Invest Karnataka 25.
With new trade wars surmounting globally, where does India stand? To talk more about this, we have here with us DK Joshi, who's the Chief Economist, CRISIL.